Good day, ladies and gentlemen. My name is Nathan Tambi, Chartered Certified Accountant from Fenlina Management Consultants. We provide a number of services, including revision for exams. And this is one of the exam-focused revision videos. Please don't forget to subscribe, give the lecture a like, and leave your comment below so that you can be able to provide more value-added services in future. When you look at the question, we are not going to go through it one by one, but this is page 1, and then this is page 2, this is page 3, and then this is page 4. In brief, the one-stop car company offers a range of services for car owners at its 55 service centers across the country. The car maintenance business is extremely competitive in all regions across the country. Each service center operates autonomously, and managers are able to choose how to package up their service that they offer. OSC's aim is to make the task of car maintenance a pleasure and not a chore. Each national website states the various services available. Customers initially access the national website, but depending on their location, they are automatically redirected to the website of their nearest service center so that they can view the offers available at that center. All bookings are made through the OSC website. Results of one of the service centers, the Midland Service Center, MSC, for the year which has just ended are given. The CEO of OSC has recently attended a business seminar and heard about Fitzgerald and Moon's building block model for performance management. He's interested in how the dimensions block could be applied at OSC company. Lastly, to explain how the standards and rewards blocks support the dimensions blocks in Fitzgerald and Moon's building block model. The question is, for each of the dimensions of the building's block model, calculate one performance indicator for MSC and one for OSC average using the available data. Briefly justify your choice of performance indicator and discuss MSC's performance relative to the other OSC service centers. You can give your answer the way you want, but I've given my response in a tabular format, which may be preferred by the examiner. In our answer, we have the dimensions, performance indicator, explanation notes, calculations, the MSC results, and the OSC average, then finally the remarks. In one of the dimensions that we need to look at is competitiveness. And the performance indicator about competitiveness is percentage of website hits converted into orders. First is to divide the number of website hits that turn into orders by the total number of website hits, both for MSC and OSC, then compare the percentages. If you go back to the question, the calculations are, as you can see, in MSC, we have the website hits, which are converted into orders, where 9506 divided by 14,000 times 100. And for OSC, it was 11870 divided by 18260 times 100, which gives us 68% for MSC, and then the OSC average at 65%. What does this ratio indicate? It is an indication as to whether MSC services are attractive if compared to the competitors. In other words, the number of website hits that convert into order will enable us to know whether MSC is competitive compared to the average for the sector. This ratio, as indicated as to whether MSC services are attractive if compared to its competitors. This is very crucial for its survival in such a competitive market. It has performed much better than other OSC service centers on average, since it was able to convert 60% of the website hits into jobs, compared to the average of 65% for other service centers. This result is a good one. Then we look at the financial, and the information that has been given is the profit margin, which you can calculate by calculating the profit margins for MSC and OSC, which are gross profit divided by the sales. And the calculation shows that MSC is 40% and OSC average is at 37%. From the data given, gross profit margin is the preferred measure for financial performance, as I have already indicated. It shows the percentage of revenue above the cost of goods sold. MSC's gross profit margin is 3% higher than the average, reflecting better comparative performance. The reason could be partly because they performed well on their new service pack sales, which is indicated in Note 4. It is also possibly because their ratio of senior mechanics to junior mechanics is lower than the average, and junior mechanics will most likely be paid less than the senior mechanics. Next is the quality of service. And in this case, you look at the percentage of jobs from repeat customers to number of website hits that turned into orders. The more customers come back to the business, the more you get confirmation that the quality of service is good. So in this case, we divide the number of jobs from repeat customers by the total number of website hits that turned into orders, then compare the percentages. Our calculations show that MSC scored at 16%, whereas the average is 14%. Quality of service is a key element of MSC service to customers, and if it is poor, customers will not return. Again, MSC has outperformed the other service centers on average by 1.8 percentage points. This could be because it has a higher ratio of senior managers to junior mechanics than other service centers. So the quality of work is probably better, hence the higher level of repeat customers. Next is the flexibility. And our performance indicator should be the total time spent completing jobs in hours divided by the total number of jobs booked and completed. We divide the total time spent completing jobs by the total number of jobs booked and completed to obtain the average time spent to complete a job, then compare the results. And our comparison, if you look at the calculations, gives 2.43 and 2.09 in respect of MSC and OSC average. What does that tell? The turnaround time to complete a job is important because if it is shorter, the customer can sit and wait for the work to be done rather than having to hire a rental car for the day, waiting longer hours or otherwise. In comparison, MSC takes longer to complete a job than the OSC average, reflecting negatively on MSC. It could be due to the fact that MSC has slightly less experienced staff on the wall, but it could also be that they make sure that more thorough work is done in comparison with other service centers. considering the fact that they have a higher level of return customers than the average, and they are graded 9 out of 10 by their customers. Next is innovation. Here we look at the percentage of revenue from new packs. We divide the total sales revenue from the new packs by the total sales revenue, then compare the percentages. And our calculations show that MSC is at 23%, whereas OSC is at 10%. MSC wants to provide a wider range of services, and therefore they need to be innovative in packaging services up. In comparison, MSC is indeed innovative in their approach to their customer needs, offering a higher innovative mix of services, and MSC has by far outperformed other service centers in this front. This also enabled MSC to generate a much larger part of its revenue by the introduction of new service packs, which must have attracted customers. This is really a strong positive result. Next is the resource utilization. And the performance indicator here is sales per mechanic based on the information given. We divide the total sales revenue by the number of mechanics to obtain the average revenue per mechanic, then compare the figures obtained. Then our calculations, as seen, give rise to MSC having 63375, whereas OSC average is 68490. So in a service organization, staff is a key resource. These indicators measure how this resource is being utilized. MSC's utilization of its staff is lower than that of the other service centers by 7% per mechanic. This is in line with the fact that the average time to complete a job is longer at MSC than other service centers. However, since the use of a slightly less experienced staff component compared to other service centers led to their gross margin being higher than average, this should not be viewed as negative. The next question is to explain how the standards and rewards block model support the dimensions block in Fitzgerald and Moon's building block model. The standards block model sets targets that must be achievable, fair, and encourage employees to take ownership. The rewards block rewards must be clear, motivating, based on controllable factors. If we look at this table, which I've shown below, you can see how they support each other. The standards block will give you targets that are achievable, fair, and are able to encourage employees to take ownership at the time of setting standards. Then the reward blocks, at the point of reward, the rewards must be in such a way that they are clear, motivating, and based on controllable factors. And when you look at the dimensions model, or the dimensions should be those that are set up for the entire organization. At the end of the day, combined together, we are going to have the percentage of inquiries that are turned into orders for competitiveness. Financial, we are going to have profitability, profit margins, contribution. And in terms of flexibility, we look at the time spent completing a job divided by the number of jobs booked and completed. Quality of service is the number of satisfied customers divided by the total number of jobs done. Innovation is the revenue from the new service divided by the total revenue. And lastly, resource utilization as the total sales divided by the number of employees. This brings us to the end of this session. Please don't forget to subscribe, give the lecture a like, and leave your comment below so that you can be able to provide more value-added services in future. Thank you very much, and may God bless you.